Okay, folks, let's go over our trade today of TZA. We rarely day trade. This just happened to turn out to be a day trade. We traded the front month contracts, the June 30 call options on the TZA. Now, why did we do that? Well, we knew when we woke up this morning, we seen the futures bright green. Everybody was happy. You're supposed to believe that because Asia was up overnight after being beaten down like a baby seal last week, that the U.S. markets were going to rally. Come 10 o'clock, consumer confidence comes out, and wow, big beat on consumer confidence. How is it that the futures were up over 100 points 2 hours in advance of the consumer confidence numbers? If you ever wonder whether or not the market is rigged, the answer is yes. How is it that the markets knew well in advance of consumer confidence they were going to hit the ball out of the park? So what do? We don't get angry. We play the game. And we knew what was going to happen. We watch our 10-minute chart at the open. IWM, which is the ETF of the Russell 2000, gapped up. You're looking at a 10-minute chart. Where did they gap it up? Right above the declining downtrend line on an intraday basis. Isn't that convenient? You could see that on the 22nd, we made a high, pulled back, made a lower high. Plunge protection team out of Washington, get ready. God forbid there's a breakdown in the markets. Late last week, we had a consolidation, fairly bullish Thursday and Friday. Double bottom setup, lower high on Friday afternoon. We wake up this morning, well in advance of the consumer confidence numbers, bam, they spike the market higher. They get the dumb money off the stupid bench, chase the market higher, and what do? The institutions sell right into the dumb money. I didn't make up the term dumb money. That's what they call us on Wall Street. Dumb money, because we're dumb enough to chase the markets higher. If you're a member of the Contrarian Trader, you don't do that. I tell my members, do not chase this market higher. They want you to believe at the open. They want you to hear CNBC pounding the table. Great news out of Europe. Great news out of Japan. Why? They're devaluing their currencies. Then the market spikes higher. They want you to think that it's going to take out last week's highs. Consumer confidence comes out at 10 o'clock. What do? They dump it. They dump the market. And who bought back here? The small investor holding the bag. What did we do? What we did is this. We looked for an opportunity to trade around what we know to be a manipulated market. So they gapped the TZA down early in the morning. This is, again, a 10-minute chart. The RSI came down to about 15, 14 on a 10-minute chart. So we knew that the risk to reward was on our side. We had a good support level back here. We knew that IWM was at resistance and very, very overbought on an intraday basis. So what do? We picked up a bunch of the June 30 call contracts and we rallied the markets higher on this counter trend move. We knew it wasn't going to last because why? Tomorrow morning on Tuesday, you're going to wake up and what are they going to say? This is the 20th Tuesday in a row that we might have an up day. They're going to spike the market again. So we knew, get out, take your profits, move to the sidelines, especially when you're trading the front month contracts because you have time decay. We made over a 13% profit within only a few short minutes. That's how you need to trade these markets. So, folks, join the 14-day free trial offer and find out how we're going to trade these markets moving forward. Folks, don't get played in these markets. Don't be a victim of these thugs on CNBC and on Wall Street. Take advantage of the 14-day free trial. Join the Contrarian Trader. Learn how to trade these markets. The margin debt is at all-time highs. There is a bloodbath coming. If you fail to look at the signals out there in the marketplace, you stand to become a victim of these thugs on Wall Street, these fancy pant Wall Street thugs.